Hi, I'm Kelly Hushin, the editor of the Trade Tech blog, and I'm sitting here with Joe Gudorf, the head trader at Principal Global Investors. This morning, he spoke on a panel about ensuring you have the necessary tools and relationships to source liquidity and trade profitably as market structure evolves. Got that all out. So I just wanted to sit down with you and recap a little of what you spoke about and what your fellow panelists spoke about. And if you could start just by giving a little bit about your background and your firm's background.
Sure. Principal is a global manager. We run every asset or every style from U.S. small cap to emerging markets. Principal itself manages around $200 billion in different asset classes. Equities is somewhere between 40 and 60, depending on how you measure it. I've been in the business for 20 years, the last 10 with Principal.
Great. And you're based where?
Des Moines, Iowa.
Wonderful. Okay. So one of the first questions that was asked in the panel was, how has the lack of liquidity changed your algo usage and why? And I know that there was a pretty significant change that I think most audience members pulled in and answered to that.
Yeah, I think it was up maybe 6-8%. So they had upped their algo usage with the drop in liquidity, which I found a little surprising in some ways, just because when we saw lack of liquidity 2 years ago, we saw more people moving to the traditional sales trader role, and a lot of that was caused by volatility. But even now with lack of liquidity, people are really going to the darks, trying to find liquidity there. So that explains algo usage going up.
Right. And now, as far as your firm goes, what are the trends that you guys are seeing in liquidity-seeking strategies, or what are you doing specifically towards that effort?
We have found that some of our agency-only broker dealers that we work with tend to have a little bit better luck, or we've had better luck with them going to find liquidity across all the various dark pools. There's something like 42 different dark pools, 12 lit venues, and the agency aggregators seem like they get a wider variety of access to these dark pools versus some of the bulge bracket firms that have a little bit more limited scope. So we've made a little bit more use of that to search for liquidity.
Right. Now, with regards to high-frequency trading, which is something that we also touched on, or you guys touched on, it's been spoken about a lot here at the conference. One of the questions that was asked was, do you think high-frequency trading negatively impacts execution quality? And I remember you had said that you rely on your sell side for this, or you alluded to the sell side. Can you elaborate on that?
Well, I think the sell side has a much better vantage point in terms of how HFT affects the marketplace than the buy side. They have control over a lot more data. They can analyze it better than we can. So we do rely on our sell side partners to, one, protect us, two, to tell us what's going on, and three, to adapt their tools that they've given us to use to make sure that we're not harmed by any of the HFT that may be harmful.
Right. Now, speaking of tools, you also had mentioned that at the end of the day, you're going to use the tool that works the best. So, of course, how do you find that tool? What are some of the challenges that come with looking for tools, and do you think that there aren't enough out there, or that there's still evolution to be had there?
Well, I think there's a plethora of tools available right now. I think the next step is for broker dealers to be more consultative in terms of helping you use the tools they give you in a better manner. The way we do it is essentially trial and error. Unfortunately, you can't do a lot of like Monte Carlo simulations or anything like that. You have to actually use live trades and live market. And so you have to have a lot of data points, so it requires a lot of trades to go through to be able to analyze the tools that are out there. And so we just, over time, look at our algo usage, look at the different dark pools we transact in, look at the brokers that we use, and try to get a feel from a TCA perspective and from a trader perspective in terms of which ones work best and what we should continue to use going forward.
Right. What about block trading? What is the trend there?
Well, we saw from the poll that everybody's going to darks, so that tells me that people are still looking for blocks, but they're not finding them. They're upping their usage of crossing networks as well. Again, looking for blocks. So there's still this desire to be able to trade in blocks. However, it just doesn't seem to be happening, which is kind of weird, because if everybody's saying they want to trade in blocks, but blocks aren't getting done, you're trying to figure out the disconnect there. I think, at least recently, we've seen sales traders kind of come back into their traditional role and start to help source block liquidity for us, which I think is a good thing, and hopefully that'll continue, because I believe everybody wants to really start trading in the 25s, the 50s, and 100s again, as opposed to 100 and 200 share lots.
Right. And finally, just going back to the actual topic itself of the panel, which is about relationships in a lot of ways. What do you think is the next step in improving buy-sell side relationships to better the profitability?
Well, I think again, sell side has to be a consultant role, or take a consultant role to help the buy side and the tools they hand out. I think the sell side trader has an opportunity to really understand the tools that they have at their disposal, and so from a buy side perspective, I'm happy to utilize that expertise that they've been able to generate, because they're working on one tool, whereas I have to work with a broad array of tools. So I expect them to have a deeper knowledge. So in some way, we're kind of going back and hopefully be able to transfer some of our workload back to the traditional sell side sales trader, and have them actually benefit us even more. So I think we're shifting back a little bit. I think we're going to top out as an industry, and algo usage by firm, I think it will continue to grow overall across the industry when some of the players that aren't quite up to the average get up there. But at some point, it's going to stop, and we're going to have a little bit more of the normal markets from maybe 5 or 10 years ago. Hopefully.
Hopefully. We'll see. Well, thank you so much for giving that insight, and we'll have to check back in with you and see where this all goes.
Thank you.
Thanks a lot.